What's up, traders? Sandro O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is December 13th, 2021. Man, what a day in the markets. Today was absolutely crazy. I'm going to title this video today Popped Bubbles, because I think today was the day where a lot of traders and a lot of investors came to the realization that a lot of these bubbles have either popped or are midway through popping, and things are just not bouncing back the way a lot of investors would like them to. So let's dive in. We're going to go through all of those details, and I'm going to show you exactly what I mean by that. Before we do that, quick risk disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan, your own risk parameters. And last but certainly not least, do not YOLO your entire account to any one of my trades or anyone's trades for that matter. All right, S&P 500 box scores. SPY down 0.89%, Nasdaq QQQ down 1.44%, IWM small caps down 1.46%, and the Dow Jones down 0.89%. So on the headline index level, not the best day, right? Like we have SPY down almost 1%, some of these other indices down over 1%, but not the worst day either. Volatility up in 3 out of 4 of these indices. You can see volatility barely went up in the Qs, but big advance in the SPY and actually declined a little bit in the Dow. Interesting. And then the breadth was poor across the board. So we had 35% advancers in the SPY, and that was the best breadth. The worst breadth was in the Dow Jones with only 23% of advancers. So we can see that it was a pretty lackluster day in the markets. And then taking a look at our Finvies Heat Map, this is where the plot thickens. So over the past couple weeks, we've been seeing a lot of these really risk-on areas of the market basically imploding. They've been declining. Everyone is worried about the Federal Reserve raising interest rates. And investors are moving their assets out of more pro-risk areas of the market. And up until now, they were moving into this increasingly narrow group of stocks. Apple was really the centerpiece of this dynamic, and then when things were pretty risk on, Nvidia and Tesla were really the two ringleaders. So we can see here Tesla was down almost 5%. I actually shorted Tesla, closed that out today. Nvidia was down 6.75%, but now we're also seeing that weakness creep into Apple. Let's actually take a look at some of those charts just to get a better feel for what's going on. So Tesla, for instance, take a look here. So Tesla just lost the 50-day simple moving average, and it looks like we're getting closer and closer to a gap fill right here. So you can see we have this unfilled gap from where Tesla had its final basically blow off top, and this stock just looks so heavy. The CEO is selling it. As of right now, no signs of this thing turning around. Then we have Nvidia, which looks like it put in a very similar pattern where it broke out, had sort of its final last hurrah, and you can see there were so many red candles here, and it really just looks like distribution. And now we're on the verge of completely retracing that final breakout, because I think what a lot of investors get confused on is, this stock went from about $200 and went all the way up to like 270, which is a really big move for a mega cap tech stock. Then it just had another huge ignite bar after it already had its big advance, and then from there I think this is really the blow off. But yeah, Nvidia and Tesla both looking weak, and now Apple, which was the shining star, is down 2.07%. And this isn't the end of the world. It's not like Apple has to top out here or anything like that, but yeah, Apple hit this Venom R1 objective at 182.13, but then sellers stepped in, of course, and auctioned it lower. It's really tough for a profit taking not to occur when the stock has had just a really nice move to the upside over the past month or so. Yeah, it went from about 150 all the way up to 180. Very nice move for Apple. But yeah, with Apple not really online anymore, it's just very tough to find new areas of the market that'll really push it higher. And one area that really suffered today is the crypto market. So Bitcoin is down 4.66%. Now it's trading down at 46K and change. Ethereum also breaking to the downside, trading down to 3761, also down 6.41%. And these growth stocks, the ARK Innovation Fund, one thing I did notice, however, is that even though this was really bad action, a lot of these growth stocks did make higher lows today. So yeah, that was basically the only silver lining. But yeah, other than that, just panic across the board. So let's take a look at our headline indices. Then we'll dive deeper into some of these individual stocks and really just do a post-mortem here. So S&P 500, we've been in a balance range for the past couple days. We've had these three pivot levels, 4,700, 4,600, and 4,500 that we've been in for the past month or so. You can see we were all the way up here at about 4740, cascaded lower, then just V-bottomed back. So I think now, the worst case scenario is this ends up being sort of like a double top and we roll over again. That would be the unhappy path. But yeah, you can see overnight we had some strength in the market. We got all the way up to 47.23, and then really just from the open, sellers stepped in and they auctioned the market lower. And we lost that 4,700 pivot, and we also lost this monthly point of control at 4679.75. So here we are, we've pulled back into the 20-day simple moving average once again. And, we can use that as our next level of support, that 20-day. Pullbacks to the 20-day are very normal, but I think what's been jarring is just, look at the size of these candles lately. We've just been in an elevated volatility environment. My trend model did flip from a +3 to a +1 today. So that was, in addition to just everything else that we're seeing, that was an indication for me to take things a little bit slower. Nasdaq pretty much breaking down to the bottom of value in one fell swoop. Not really looking the best. Russell 2000 down over 1%. Mentioned this earlier in our afternoon webinar for Pristine Capital members that this is something a little bit different because the Russell's testing the bottom of this almost year-long range, and it could barely manage to bounce here. So I'll show you what I mean on the weekly chart. So look at how many long lower wicks we've had in the small caps over the past 10 months. So many. And over here on this weekly candle, we did not get a lower wick, a long lower wick. We actually just closed towards the lows. And then on this bounce week last week, we didn't even close the high end of the range. We were already losing steam, and now here we are. So I think this puts us in jeopardy of could the small caps just roll out of bed here? We'll have to see how the action plays out, but that's definitely a risk on the table. And let's see, the Dow Jones closed down 0.83%. Dow Jones still looks okay. Also trading to the bottom end of this 4-day balance range. Now let's take a look here. Let's pull up our sectors and style factors so you can get a feel for what happened. So take a look at this. We have consumer staples, utilities, real estate, and healthcare, which moved higher. And these are all areas of the market that when everyone thinks we're heading into a recession, those are the areas that you bid up. So there's some people out there, some traders that, they're just like, who cares, man? Now I'm just going to focus on these areas and I'll still play to the bullish side, which I think is okay. If you're getting long consumer staples, utilities, you're doing a good job. But I think it's important, if there's just 1,000 stocks in the market and 5 of them are going up and 995 are going down, you can try to pile into the 5 that are going up, but it's just kind of a tough maneuver to pull off when it's just the very tiny corners of the market that are still advancing. And you can see on the losing side, blockchain assets down over 4%, cannabis down over 4%, some of these ARK funds down over 2%, European financials down, regional banks down, Chinese equities down over 3%. So a lot of carnage out there in the market. And then these style factors, we had high div, low vol, defensives, and min vol. That were the only style factors that were green. The rest were red. And you can see high beta really had the worst of it. down 2.52%. So for today's session, in our pre-market webinar, I just said, hey, like things don't really look right. I'm just going to try to take things slow and, just hold on to my cash balance for as long as I need to. This might be a while before this bearish price action filters through to the market. But I did find one opportunity that I thought was interesting, so I did put it on. So basically I did 2 trades today. Unity, I got long the February 18th 140 calls for $14.90. And then I had a short position in Tesla. I had a put spread that I put on, I believe it was on Friday. When I closed up for $450, I had paid $370 for it. And I just put here taking the base hit. I've definitely noticed that since we entered this market environment, my hit rate on options trading has declined, rightfully so. So for me, I was like, you know what? I'm just going to book this winner. I want to book something positive. Tesla's such a squirrely stock that, if this thing, a good headline comes out, just bounces to the upside. I was like, I just want to book this for the time being. Yeah, Unity, let's take a look at what was going on there. So Unity, I noticed in our afternoon webinar, all I was doing, I was not trading. I was just setting alerts because I'm like, you know what? I'm not going to trade this, but I'll set some alerts just in case some stocks get to the levels that I'm looking for. Hey, then I'll go ahead and trade them. So Unity was one that I noticed out of all these growth stocks, it was really standing out to me because it was putting in a hammer candle rather than almost every other growth stock that was really just putting in like a ugly looking candle. Like Airbnb closed down 5%. A lot of charts look like this, but this is an example of a stock that just made a higher low. What else here? Airbnb, we had a stock like Celsius, making a higher low but still just looking awful. A lot of these names are really just taken to the woodshed pretty much. Like, let's just pull up Roblox was another one that stuck out to me as looking a little bit better. Yeah, seeing a lot of this pattern around there in the market. So if you see these, they're pretty much all like, these are some of the best ones and they had pretty sizable red candles. I noticed Unity was really just putting in a hammer from around like 2 p.m. onward. So I was like, you know what, I'm going to set an alert at this weekly value area low. If it gets in there, I'll go ahead and put a position on. So I put the position on, and then sure enough, I believe it's Morgan Stanley upgraded Unity after hours. So Unity is now up in the after hours market about 3%. And I definitely needed this trade, just to get back in the saddle, really. But yeah, it's really interesting that when you just look at the pure price action, Unity was really like the one name that was standing out within the high growth, high valuation stocks. And what do you know? We find out after hours that it got upgraded. So it just goes to show, looking at the price action can tell you a lot more about a stock 90% of the time than looking at the news or the fundamentals. Pretty crazy stuff. And you can see that right here. If we look at our after hours movers, the Unity is the number 2 asset on here. So let's take a look at our options order flow and just see where we're at. So we can see a lot of the destruction in a lot of different areas of the market. Some people are saying, this bubble popping is really just beginning. And that might be true. But for some of these stocks, like a lot of them are down 50% already, 60%, crazy numbers. So I don't know. To be honest, like my gut feel is the market's really discounting this Fed taper. Maybe not in the S&P 500, but in the growth stocks certainly. And I think it's doing an efficient job at that. So I think with some of these stocks, it's not really just beginning. But that's just my personal opinion. Maybe some of them that drop 50%, maybe they go down another 50%. Who really knows? But I think it's just important to stick with your technical process. Don't just enter a name to enter it. Wait for it to reclaim a technical level. That I think will help, dramatically in your process. Let's see, we got Tesla, 3 billion afloat, Apple, SPY, LRCX, Viacom, IWM. Let's check out our Tradescape. Amazon, this got an upgrade this morning, and the stock really just did not respond well at all. Yeah, another one just looks like a straight line down. Nvidia seeing puts and calls, and we already looked the Nvidia chart, looking not so hot. Viacom, all calls here. Let's take a look at Viacom. Wow, stock looks like nothing I want to be involved in. Apple, pretty much all calls. Everyone's been spamming Apple calls for about a week now, and I do think that, you know, it can't just keep running up forever. You know, I think this is a pretty high volume reversal candle. So maybe we'll get an opportunity to buy us at the 20-day simple moving average. Who knows? AMD, mixed action. I think this is good that we're starting to see mixed action rather than just call buying again. It's really what we need. We just need like a sentiment washout. And I think we're starting to get that. Like, I can just tell the vibe on, you know, FinTwit and just in general, you know, it's a very like almost like somber mood, because I think a lot of active investors, they do invest in these growth stocks and these more like high flying areas of the market. And those are the areas that are really getting hit the hardest. Shopify, a bunch of puts coming down. And then LRCX, all calls going up here. Let's see how LRCX looks. Looked at this one earlier in our afternoon session. Yeah, and this one just putting in a red candle. So in a lot of different areas of the market, we're really just seeing how red this tape is. And again, you know, I just think it's super important to at least wait for a reclaim of a technical level before you get involved in some of these names. I know the temptation is going to be there, like, you know, like the stock just can't go any lower. That's always going to be there. But I think in an environment like this where nobody knows where the bottom is or how far along we are in this sell-off, I think it makes sense just, hey, wait for some strength. Wait for a bigger buyer to come in and then go ahead and make that buy rather than just sticking your neck out and really just going for broke on something. And then last point to discuss, we do have the Fed meeting coming up on Wednesday. Everyone's saying, you know, the Fed's going to speed up the pace of their taper. It's going to be $30 billion a month, and we're going to be done by March, at which point we can start raising interest rates. And if they announce that, you know, I'm really curious to see, like, does the market just continue to spiral out? Or do we actually get some relief? So I don't think anyone knows the answer to that question. I think if anyone says they do, they're just, like, on another planet. But yeah, you know, just seeing this carnage across the board, really just have to respect this price action and be patient. You know, it might not be, you know, we might not have a bull market for quite a while longer. You never really know. Like, for instance, look at this. This is just to put things into perspective. So, K-Web, for instance, or I'll just look at, yeah, the Chinese ETF. Let's look at FXI because it's more inclusive of China. So, China, they started tightening up monetary policy. I'm zooming out to the weekly. Back in like February of 2021, I believe it was. And really ever since then, look at it, like their asset markets just went up like a straight line. Look at this. Boom, 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 almost like a parabolic run. And it's completely given everything back in devastating fashion over the course of about 10 months. I think most investors in the United States, I think most investors are not prepared for a 10-month drawdown. And we all just naturally think like that can happen in China, it can happen in Europe, it can happen anywhere else, but it can happen in the United States. It's not going to happen to us, right? And I mean, look at our market right now. SPY, look at it. Looks the same as how China looked. Like, this is literally like a straight line moonshot higher. Let's look at the monthly chart. Yeah, look at that. So I'm going to be just like super bearish here, like super just getting you thinking. Like before the coronavirus and before we introduced all this liquidity, the market, like I remember this vividly, it was around like 3,000, 3,500. It was like, oh my gosh, that's a big deal for the market to get there. Now we're at like 4,600. What if a lot of this was an overthrow? You know what I mean? Like, what happens if we end up coming back and revisiting some of these levels and this just ends up being, you know, froth from this bull market? The key is, like, I think for this stage in the market, you have to think in terms of like months rather than in terms of days. So like, okay, it can't be like how it usually is, like stocks were down today, so that means they're gonna be up tomorrow. I'm like, that's paid you so much over these last 2 years. But like if we just enter a sequence where like money's flowing out of the market, you know, we get, let's say, like 3 months of down action or sideways or whatever it might be, you want to be prepared for that. And I think the only way to be prepared for that is to just say, I'm not going to enter on deep red candles. You know, I'm going to wait for some sort of confirmation or some sort of signal to get me to be more aggressive in the market. So yeah, tomorrow I'm definitely coming into this session with an open mind. And again, you know, in order to put on more risk, the market has to prove it. Market has to regain some levels. I'm not going to be, you know, buying into some deep red tape. So hope that's helpful. I know today was probably not the most fun day for, you know, 90% of active investors, but hope this helps, and I will see you all tomorrow.